Welcome to Candlelight, where price and mechanical function. In this video, I'm going to be going over what stocks to stay away from. In short, what you shouldn't be touching. There are tens of thousands of stocks out there, and if you're looking for something to go into, you'll definitely find more than a handful of potential possibilities that are good. But on the marathon of finding stocks, on the start line, there are two questions that any stock should pass before you even go past that point to looking into it. And these are the foundational two questions. The first is price. Any stock that trades below $15, you should stay away from as a rule of thumb. And the reason why is Wall Street doesn't go into any stock that trades under $15. And the reason that affects you is anytime that there is a demand zone or a supply zone, let's just say demand zone in this case. If price is coming into demand, you want to buy in that area of demand. A normal stock that is trading, let's just say Tesla or whatever, that's trading above $15, you have Wall Street putting in millions and millions of dollars worth of buy orders in that area of demand, making price rally whenever it enters, and then if it has a whole bunch of buy orders in there, it should enter and then continue to rally back out of that zone. All you do as an individual investor is, or as an individual trader, is you have a relatively low amount of shares. You just put your order right on top of Wall Street's, and Wall Street pushes price to the upside. You need Wall Street on your side. You need those millions of dollars worth of buy orders or sell orders to the downside, either way. But you need Wall Street to move price for you, which is why you want to be trading with Wall Street, plain and simple. And any stock that doesn't have Wall Street on its side, it's subject to a low market cap. And what a market cap is how much money is in any asset. Let's just say Microsoft. Microsoft has a huge market cap, massive. If I were to go into Microsoft and put in one, like a market order at whatever price, put me in for 1 million, it'll hardly move Microsoft because Microsoft has so much money already in it. It's very stable. But if there's not a lot of money in whatever penny stock you're going into, Wall Street isn't in it, obviously. So then you're subject to wild swings that you're not prepared for, and you don't go into anything that you don't like surprises as a trader or investor, or as an individual. You don't trade anything that gives you surprises. And if somebody has a low market cap, let's just say the CEO does a pump and dump, it'll just he'll put in a lot of money, a lot of buy orders, and then force the price high. A lot of people follow and then just end up buying high, and he just dumps everything. You're subject to those kind of moves, and you're subject to news because it has low market cap because Wall Street isn't in it. You don't want those kind of stocks. You don't want something that's just going to move just because, or just because of a news report. This product came out on this show and making price jack to the upside or downside because of some bad news or something like that. So you want to stay away from anything that trades under $15. The second is volume. Now I'm not a very big fan of volume. There are entire schools of trading which are an absolute farce that explain why you should go into and out of a position because of volume. That's not what volume is for. As a criteria to trade a certain stock, you use volume to tell you exactly this: is it liquid? Particularly as a trader, and I'm about to explain investors in a second. Particularly as a trader, you never want to trade any stock that trades under $1 million minimum. 1 million. I'm sorry, not $1 million. 1 million shares per day. On a daily basis, you do not want to trade anything that trades under or has a volume under 1 million shares on a daily basis because it's just not liquid. Your nearest buyer to your nearest seller, you're going to have a spread. The distance between your buyers and sellers, that's the spread. If you have a very liquid stock, let's just say the stock is trading at 32.50. Your nearest buyer is going to be at 32.49, and your nearest seller is going to be at 32.51. I said 32.50, right? Yeah, so 32.51. The spread is very small. If you don't have a lot of volume, then the stock is not liquid. There might be up to $1 or more. between your nearest seller and your nearest buyer. You don't want that. That's a bad deal. And I'm about to show you, or I'm going to show you a visual example of that. As an and as a trader, normally stay away from anything under 1 million, but ideally stick to something that has 2 million shares traded per day. 1 million absolute least. As an investor, 1 million should be your benchmark. As an investor, chances are you're trading, larger share size probably because you're doing longer moves with a bit more share size. But because it's longer, or because it's just a more long-term trade, you can do a position or a stock that trades 1 million shares per day. But those are your two criteria. It needs to be at $15 or above. If not, you don't have Wall Street behind you. And volume needs to be right. It needs to be liquid. Now let me show you a stock that is a fantastic example on why you should stay away from penny stocks. Stay away from stocks that aren't established, that don't have market cap, that don't have volume, that don't have Wall Street behind it, that are just waiting for some piece of news to make price go up, and then chances are if it goes up, it's going to go up ballistically because it's news based and amateurs trade news. And then it's just going to come down just as hard. So let's jump right into it. All right, this is a monthly chart of a company called LifeVantage, and I remember this happening back in the day. This happened in like 04, 05. LifeVantage is this. It's a company that comes up, or it's a company that came up with an anti-oxidation. It's a pill to keep you healthy, so to speak. But anyway. This is a monthly chart to where every candlestick represents 1 month's worth of price action. And right around this point, right here, price just jumped up ballistically. And I've covered ballistic movements like this. This is just a pocket of air. Anything that moves ballistically in any direction, price comes down just the exact same way because it's a pocket of air. There's nothing sustaining this move. But the reason it just jumped to the upside all of a sudden was because there was a Dateline show, or there's a Dateline segment on how awesome this pill was. And it was a pill on Protandim. It's an antioxidant. There we go. That's the word I was going for. And notice that there are no levels behind it. Like there's nothing saying, hey, here's demand, by the way, you should buy here. It was just all based on news. And you don't want to trade news. News it can go one of two ways. It can go, like the CEO could have been indicted for tax fraud, or it could all of a sudden, you don't know, hey, today there's a Dateline show and it just absolutely spikes to the upside. In this case, it was in your favor, but you could just imagine, what if you're short? Then this would have absolutely creamed you, right? So you don't want to base your money on any kind of news. You want to base your money or your positions on cold, hard areas of demand, areas of supply, because there is ballistic movement to the downside or ballistic movement to the upside. There's no arguing that fact that there's demand or supply here. Some areas get broken, but then there's something that you can do afterwards. But in this case, price just ballistically moved up for no reason. And then it's done nothing since 07. It's just chilling. So if you invested down here at, what is this, $5, so to speak, $2, then you've been investing for the better part of 12 years, and price has done nothing because Wall Street isn't in it, making price go up and down and giving you levels, and then you can make profit off the distance to the upside or distance to the downside in those moves. You just don't have that. So that's why you want to stay away from penny stocks, because it's based on news, and you want to stay away from that. All right, now I want to direct you to the same stock, but this is a daily chart. Every candle represents 1 day. My center chart is a 240 minutes, that's 4 hours, and the right chart is a 60 minute. But I want to come back to what I was saying about volume. Again, I'm not a very big proponent on volume. It tells you very little, but it does tell you what the liquidity looks like. And I'm about to show you what the spread is, or I'm about to explain to you what a spread is. But if you notice here on a daily chart, it'll tell you the daily amount of volume traded. This is 50,034 shares a day, a far cry from the absolute bare minimum of 1 million shares traded a day. It's not liquid. And this is what not liquid looks like on a chart. This is called a matrix, and it just shows you on your left-hand column, these are where your buyers are, and this is where sellers are. Now, again, this is the weekend, so price is not trading actively. But if you notice, $8.12 is where the current price is. Right here on a daily, that's where price is trading. And it's well, it's not really matching up here, but $8.12, let's just say it's here. Normally on TradeStation, which is what I use, this yellow bar is where current market price is actually trading. Right here are your buyers at 801, and check this out. Your nearest seller is at 845. Let's go to the 60. Your sellers at 845 are at the high. That's where your sellers are. That's where your buyers are. Right? Let's just say that you want to buy. Right? If you want to buy, then you're going to need, if you want to buy anything on any stock, any currency, anything, if you buy, you need a seller, right? And if you want to go short, you're a seller, you need a buyer to buy it from you. So, right? So you need the opposite side of the coin. Here, if I'm a buyer and I want to buy something, I need a seller to sell it to me. So you're thinking that you're going to buy at 806, right? Right here in the matrix. 806 is a bit lower than this 812. That's kind of on the low here. If you press buy, your order is going to get filled at the nearest sell order because that's the seller selling it to you. You're going to get filled at 845 all the way up here. So if price is at 812 or right here it's showing like at 806, regardless, kind of at the low of this move or at the low of this area, you're automatically put at 845. You need price to, rally beyond that point to even put you, there we go. You need price to start rallying past, essentially the high of that day for you to be in profit. The second you go in, you're already at a loss because current market price is at 806 or 812. Let's just say this area. So you're already losing from here all the way down here. And if you were to multiply that times, let's just say 500 shares, which is not a lot considering it's an $8 stock, you're already in the red the very second you press buy because the spread is huge. Because there's no volume. It's not liquid. There's only 50,000 shares traded a day. You don't want that. So the main two criteria that you should stick to when looking into any stock is it over $15? Because if not, Wall Street is not in it. And if Wall Street isn't in it, it's just going to base forever. It's not going to go anywhere. And you can wait 10 years hoping for some piece of news. But guys, don't base your financial security or financial future on hope. For the same reason you should not base your, I hope I don't get pregnant kind of thing. That's just not a good idea. And second is volume. Is it liquid? If it's not liquid, you're going to have these massive spreads, which will automatically put you at a loss the very second you get into any kind of position. It needs to trade at the very least 1 million shares a day. If not, don't trade that stock. Go to something else. There are tens of thousands out there that you can go into that have fantastic opportunities. All right, I hope this was helpful. I'll see you guys on the next one.